Hi there, welcome to Kneppy Invest. If you know anything about me, you should know that October is one of my favorite months of the year, equal with July, January, and April, and just behind February and August. And the reason why October is one of my favorite months of the year is because many small cap companies on the ASX release their quarterly cash flow report, or Appendix 4C for non mining companies, Appendix 5B for mining companies. So these Appendix 4Cs and 5Bs just show us, the investor, how companies are performing. And what I'm looking for is those companies that have hit that very important inflection point of becoming operating cash flow and free cash flow positive. So I am on the search of those companies. Now, typically, I like to reward the first company that releases their Appendix 4C in the month. And I thought that was Althea because they released their Appendix 4C on October 11. And for some reason, I just thought it was the first company. And then I had a closer look and realized the day before, on October 10, there was another company that released their Appendix 4C called Althea Group, ticker TAL. I know nothing about this company, Althea Group. Looks like they are into residential aged care, retirement villages, that sort of thing, which is probably why I have not had a look at this company in the past. Now, you might argue that a few other companies released their Appendix 4C before Althea Group. I think it was Civ Capital, Quest Communications, but I would not classify those two companies as real companies, and I'm not going to have a look at those companies because they're not real. They have very little revenue or zero revenue at that. So let's have a look and talk about Althea Group, and then I'll do a video on Althea Group to reward that company for actually being the first company to release their Appendix 4C for the October quarter. Now, on to Althea. What do they do? Well, this company is all about cannabis. So we're talking about pharmaceutical cannabis, and what's the other one? Medicinal cannabis, pharmaceutical cannabis, and recreational cannabis. In fact, they have two divisions. Althea Group has to do with pharmaceutical cannabis, and Peak, their other division or their subsidiary, has to do with recreational cannabis. Now, if you remember 2018-19, there was a lot of hype in cannabis companies. And in fact, the market cap of Althea reached 250 million. But all that hype's got away, even though the company has almost hit pay dirt. In fact, the company is now operating cash flow positive. If we go back to when there was a lot of hype in the cannabis sector, this company had almost zero revenue. Now it has revenue approaching $10 million per quarter. Now, a few facts in regards to Althea. I've already talked about the business: cannabis, medicinal, pharmaceutical, and recreational. Listed in the ASX in September 2018, and I probably would assume a lot of cannabis companies listed around the same time, just before or during that hype period, that bubble period, that maybe that first and only bubble period for cannabis companies on not only the ASX but also worldwide. The largest shareholder of Althea Group is Joshua Fegan with 14.5% holding. He's also the CEO of the company, which is very important, so there is skin in the game here. Only 361 million shares on issue, and the market cap of this company at 3.4 cents is only 14 million. And that's towards the bottom of the historical market cap range of this company, which is between $11 million just before the company released their Appendix 4C, because there was a little bit of hype, a little bit of volume coming in. Share price did increase, and the peak in the hype of this company and other sort of cannabis companies on the ASX was back in 2019. And in fact, the market cap of Althea reached a high of 250 million. And again, in 2019, this company wasn't producing much revenue or receipts, which I'll talk about in a second. And the ticker code for this company is AGH. Now, before we have a look at the September quarter for financial year 24, which is the first quarter of the financial year, let's go back 1 year ago, because I just want to see how this company is performing. Now, 1 year ago in the September quarter, this company had $8 million of receipts, but was burning through $2.7 million of cash just in operations. And you can see the cash on hand falling quite quickly from 6.6 million to 3.6 million. So probably the biggest concern I would have had if I was following Althea Group closely at this point in time was they would have to do or need to do a capital raising. And they did do a capital raising because they were burning through a lot of cash. So let's have a look at the September quarter for financial year 24, just to see how this company has progressed in the past year. And I've already given it away. This company is now operating cash flow positive, which is an important inflection point. The next important inflection point is becoming free cash flow positive, and the company has not achieved that just yet. But more importantly, receipts are still growing, up $1.3 million from last year up to $9.5 million. And the company has really kept a control on their costs. Administration costs are flat. Staff costs down $600,000 and product manufacturing operating costs down $500,000, which means instead of burning through a lot of cash in operations, the company is now operating cash flow positive. But again, unfortunately, the company is still spending a little bit of money in financing and investing activities. So cash on hand actually fell from $4.3 million to $3.6 million, but not down $3 million like it was in September 2023, only down $700,000. So even though last year it was pretty obvious they needed to do a capital raising, it's not so obvious now. And if they can become free cash flow positive, the chances of a capital raising become less and less unless they do acquisition or two. A few other interesting tidbits in their commentary of this particular quarter. And probably the most interesting tidbits is that the non-executive directors, the CEO and CFO, are taking a pay cut. So the non-executive directors have taken a 25% reduction in their pay for the next 6 months, and the CEO and CFO have taken a 10% reduction in salary for the next 6 months. They also mention here that they anticipate reporting another positive cash flow result for the December quarter. Now, we saw in the previous quarter that positive operating cash flow was only $35,000, and in fact, $25,000 of that was government grants and incentives. So realistically, they're only operating cash flow positive by $10,000. So maybe again they'll be operating cash flow positive $10,000, or maybe $1 million, $2 million. Who knows? But again, they anticipate having another positive cash flow result for December quarter. One thing I like to look at for all companies releasing Appendix 4C is growth in receipts. I want to see receipts growing. Now, remember, the market cap of this company was $250 million in 2019. If we go back to 2019, this company had receipts of about $280,000 per quarter. But you can see receipts growing really nicely, almost consistently from quarter to quarter. In fact, there was only one quarter here since 2019 when receipts actually fell, and that was the December quarter of 2023. Receipts now up to $9.5 million. Now, you might be concerned that receipts only grew $100,000 from last quarter to this quarter, but we have seen that in the past. In fact, between December quarter 2022 and the March quarter, receipts only grew $100,000, and then they jumped up the next 2 quarters. So just because receipts didn't grow all that much in this particular quarter doesn't mean it's the end of receipts growth for this company. I'd love to see receipts get above $10 million, and I'd love to see the company keep a lid on their spending. And if they can do that, increase their receipts and their revenue, keep a lid on spending, that means this company more than likely will become free cash flow positive in the next few quarters. But the market doesn't like this company at all. In fact, lots of negative sentiment around Althea Group. Share price is still in a long-term downtrend. This is the daily chart going back to August of last year, and this is the definition of a downtrend. The chart or the share price going from the top left to the bottom right. Now, there was a little bit of excitement when the company did release their Appendix 4C. Share price did increase from about 3 cents to 4 cents. Yeah, a 25% increase in share price in the one day, but there was a lot of selling coming in during the day. And we know there's a lot of selling because the share price closed at 3.4 cents instead of 4 cents, which was the high on the day. And the reason there was a lot of selling is just look at the chart. Many, if not all, shareholders of Althea Group are in the red. They bought at higher prices. And the mentality of most shareholders, or say, probably the best way to put this, the mentality of most investors in today's age is if the share price doesn't increase instantly from when they bought, the company is automatically a dog stock. So most shareholders in Althea Group think this company is a dog stock. So when they see the share price rise or rally 25% in one day, they see the opportunity to sell out of this dog stock. So there is selling pressure. So even though there was really good volume on this day, there was just too much selling. Too many of these shareholders just wanted to get out, take their loss because they saw the share price rally upwards of 25% in one day. So there is potential the share price will still go down from here. So the company have to prove themselves. They have to prove they can maintain being operating cash flow positive in the future and hopefully becoming free cash flow positive. And I think if the company can show they can become free cash flow positive on a consistent basis, this company will be looking cheap at a markup of $14 million. I was going to show you the weekly chart from the company listed on the ASX, but it looks absolutely ugly. You can do that yourself. Share price reached a high of $1.45 during the peak in the cannabis bubble back in 2019. So if you have any questions about Althea Group, about their results, if you're a shareholder of this company and you're pretty optimistic about the future of the company moving forward, I'd love to hear your opinion on this company. So leave your opinion, your thoughts in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.